Every single day at 8 a.m., there is a massive trading opportunity that 99% of traders completely miss out on. It is one of the most predictable setups in the entire Forex. Most traders in the UK are either asleep or they're just too lazy to actually wake up early in the morning around 8 a.m. to make the most of this super predictable setup. This setup has personally been part of my trading for years and years on GBPUSD. I've even made multiple payouts from funding pips using this exact setup, and each one of these payouts were $4,000 to $5,000 each. By the end of this video, you'll exactly know what to look for, how to look for it, and how to exactly trade it so that you yourself can also make payouts like I did at 22, over $500,000 in payouts from prop firms using simple mechanical trading systems just like this one right here. London Open is one of the most important time sessions in the entire of trading. Why is that? Roughly around 35 to 40% of all daily Forex volume runs through London. When London opens, it creates major liquidity. Price usually has been sitting very quiet during Asia session, building this liquidity on the upside and the downside. During London is when you actually make use of this liquidity, and I want to show you exactly what I mean on the charts later in this video as well. And one of the most important things about this is that it happens every single day, which means it's predictable. What does predictable mean? It's easy to build a mechanical trading system around it. It's not a random phenomenon that only occurs once a week, once a month, or once in a while. It's something that happens every single day, so all you have to do is now build a system around it. And especially as a UK trader myself, this is such an advantage because 8 a.m. in the morning, it's our morning time. It's not in the middle of the night or during lunchtime, some odd hours. It's literally first thing in the morning. And especially after a good night's sleep, the first thing in the morning, it's where your brain utilizes its most power and it's actually able to concentrate the most. So that's why the London session is so optimal for us in the UK. So what exactly happens before London session? Roughly 11 p.m. the previous day to 7 a.m. the current day, it's when Asia session, most of its movement and builds up usually these tight ranges that then build these liquidity to the upside and downside, which we then exploit during London session. Usually from my own data that I've collected in the past, the tighter the range that's been built during Asia session, the more explosive the impulsive move during London Open will be. The two major levels to look out for are the previous high and the previous low of the previous Asian session. We will use these liquidity levels as our major points of interest. We will have potential liquidity sweeps of the lows or the highs, and then around that we can now build a whole breakout system to then go ahead and take trades in the London session using that breakout system with predefined entry, stop loss and take profit criteria, so that you can enter your trade as a pending order and then leave the charts until the next day and come back and see what's actually happened to your trade without being emotionally actively involved in your trades. Because what happens when you're emotionally actively involved in your trades, that's when 99% of traders actually fail and they make all the mistakes. Over trading, over leveraging, revenge trading, all of that happens when traders are actively monitoring their positions. That's why I use this specific approach. One of the major mistakes people make during London session is they actually enter on the sweep of the Asia low liquidity or the Asia high liquidity. That's actually where you go wrong. You never want to actually enter on the sweep because that's where we get faked out, and historically from the data I've collected, price will actually tend to do is most of the time after a sweep of a low of the Asian liquidity or the high, it will actually reverse. So you're better off actually entering an opposite trade to the sweep. So if we sweep the highs, you're better off actually trading the reversal of the sweep instead of the continuation. Continuation is way less probable than the actual reversal, and this is all backed by data. Another big mistake people make is actually trying to trade the Asian session to predict the London session movement. That is a major mistake because they're not really correlated. If you want to trade the Asia session, now go on some pairs that are actually correlated to the yen or other Asian pairs. Maybe the Nikkei 225, which is the index in Japan. You should trade specific session related pairs because during Asia session, there is no liquidity injection into GBPUSD. There's only range forming liquidity from the Asia session. So you shouldn't really be trading that. You should use the information to make the best decisions now in London session. Let's go on the charts now, and I want to show you exactly what I would do and what I look for on GBPUSD to make the most out of this 8 a.m. trading setup that 99% of traders miss. Okay, so now we are here on GBPUSD on the chart, and I have a few things marked out. I have a red line on every single day. This pretty much shows to me midnight London time. As you can see, this is midnight London time. Second thing I've marked out, it's 2 candles every single day are painted yellow. As you can see, yellow somewhere here, right here. This yellow is 11 p.m. the previous day and 7 a.m. the next day. This is to help me see the Asia session. I don't like having like a proper session indicator. This is how I visualize actual sessions. And then you will see these purple lines. This is the high and the low of the Asian session. So if we start from this day right here, as you can see, this is the Asia session high and this is the Asia session low right here. So now what most people will be looking around this area is they will want to enter, in this case, either a continuation once we break down these lows, or they will want to enter a reversal. In this case, continuation will play it better, but what I would have personally looked out for is a reversal around this area, and my TP is targeting probably liquidity around this area, instead of entering shorts here with a stop loss here, which, as you can see, you would have been caught out here and then price will continued. So using my method, I would have still caught some profit on this day instead of being stopped out like most people. So how would my method work is, in this case, as soon as we got the liquidity sweep down here by this candle, the first pointer is I personally do not count a liquidity sweep if we haven't closed below the actual low of Asia or the high. In this case, we wicked right below it, we didn't close. So what you do in this case, you wait for an actual closure. This is the closing candle. You need a mechanical system to take advantage of this. One of my mechanical criteria is you do a high and low breakout system. So in this case, if we were to do a high and low of the previous candle, and then we were to take the breakout of this range right here, which happens right here, stop loss would be 50% of the range. So 50% of the range is around here. And then you target a roughly a 1-to-1 risk to reward, something like this. This would have been my textbook entry for GBUSD in this case right now. So I have multiple mechanical entry systems. They're used when different criteria is met. In this case, the criteria was you then get a sweep on the first candle, you go in the second candle. In that case, we do a high and low of the previous candle. And there is also other things to backtest. And those are, how big can the previous candle be? Because imagine the previous candle is this big right here. That is void. You cannot trade that day. What you would do in that case is you would take the candle before and that candle. Again, this is all data based. I want you to go back on the chart, back test this for the last year, 2 years, 5 years, collect that data, see how it performs. While you collect that data, you're gonna realize there's things that you can improve on. Maybe risk to reward can be optimized on some of these entries. And I want you to do that. That's how you build these crazy profitable systems. Let's go to another day and I'll show you exactly how we traded it. This time we have this day right here. As you can see, range between these 2 points. We have our high and we have our low. In this case, what I was saying in the previous example has happened on the first try. So what you can see, we got a massive impulse candle right here that has swept liquidity. In this case, what I would do is I would now wait for the next 3 candles before I make a decision. So as you can see, we have this candle, we wait for 1, 2, 3 candles. We do again a high-low breakout system. Breakouts are the most profitable systems, by the way. I want you to look into this. In this case, we pick sweep candle, the highest point between those, which would be something like this. This is our range now. Now we wait for a breakout of this range. As you can see, if we were to reverse here, we would enter the short and made the most out of this. This naturally would have avoided a fake out and got us the very optimal entry on the short. But what happened is we got long trade actually right here. This one, you put your stop loss right below the impulse candle and then you target a 1-to-1 risk to reward. Something just like that. As you can see, this would have been a winning trade as well. I want to show you one last example now of a different system. This is me trying to give you access to my brain so that you can see how I think on the charts and you can use these mechanical systems to actually make profits yourself. And bear in mind, I'm not just talking nonsense. This is all backed by years and years of proof and experience. I've made $500,000 trading profits in the last 2 years alone, and that's all verified. I've been invited to multiple podcasts throughout the years. I'm even on Alpha Capital Group's homepage. Back to the next example. This might be a good example because it might be a losing example. So let's get into it. As you can see, we got Asia low sweep right here and we actually closed outside of it. So what happens when you close outside on the first go? 1, 2, 3 candles. and then you do a high and a low out of the 3 candles. So that would be here. This is your range. Range has been formed, and then you take a short trade here, just above the impulse candle, 1-to-1 risk to reward, and as you can see, we would have been stopped out just around here. And that is absolutely part of the process. That's normal. Losing is equally as important as winning when it comes to trading. Don't get discouraged or demotivated when you backtest and you have a losing week, a losing month. Bear in mind, I've made $500,000, guys, trading prop firms, and I've had a losing quarter before where I lost consecutively for 3 months. I would fail evaluations after evaluations. I would not make any money for 3 months. But that's when I actually learned the most, because that's when I spent more and more hours refining my system, learning the ins and outs, making sure I have good drawdown controls. And that's when I also made a risk management system where you cycle between prop firm accounts. You don't start a prop firm funded account at break even and then lose the full drawdown. You cycle between a couple of them. You cycle prop firm evaluations with your funded account and funded accounts together as well. This way, you always have a buffer of drawdown and you're never really blowing your whole drawdown. Let me know in the comments below how you trade the 8 a.m. session every single day, and if there's anything else you want to know about how I have made all these payouts trading GBUSD, specifically the 8 a.m. session, the ones I've showed you right now on the charts.